been talking to a lot of people. They've been talking about gas prices going up, food is going up, and then we've talked about, the real estate and the market, and that's going up. So that's why I have you here. And I
Hmm.
wanted you to, if you could chime in and give us some do's and don'ts, especially the climate we're living in right now, when it comes to buying and selling right now, homes.
Yeah, well, the market has changed a lot in the last couple of years. Rates are the highest they've been since
Okay.
like probably 2006, but that's still not bad news for us because they're still relatively low compared to what they've been in the last 30 years, right? Except for a
Mm-hmm.
short period of time.
Mm-hmm.
What we've seen is now because rates have gone up and there's a little bit of inflation, prices are up, prices are starting to come down and there's starting to be
Mm.
more inventory all over the country. So what I've seen is that we have more people who are waiting to purchase now have the opportunity to purchase because they can
Okay.
negotiate. There aren't going to be a number of like 50 offers on every home now. There's actually an opportunity to purchase and you can get very creative with it, because sellers are, I don't want to say a little bit more desperate, but they have to work a little bit.
Mm-hmm.
You can negotiate to have, closing costs paid or help have your interest, have an interest rate buy down. So this is actually a very good time to really start looking if you're a buyer.
Okay.
Um, with regards to do's and don'ts, there are always a few things you want to make sure you take care of.
Okay.
Always know about your credit, okay?
Okay.
Um, we,
I'm writing this down, by the way.
oh yeah,
Yeah, taking notes, okay?
absolutely. You know that now with our credit cards, we have all these different services that kind of give us an idea of what our credit scores are. But you want to, reach out to someone, either a loan officer at your bank. I know we all have bank accounts. There should be someone there or a real estate agent who you've communicated with, their referral partners. Find out what your credit is, your credit scores are. And when you see that, you can absolutely do that for free. If I access someone's credit, that's a free service. So the first thing you want to do is let's see where your credit is. Once
Okay.
you determine where your credit scores are, then that loan officer who you trust or whoever can kind of guide you with, hey, this is what you qualify for. These are the guidelines you need to meet.
Mm.
This is what a payment should be. This is what your down payment should be. So again, credit first, and then reach out to that person either at your bank or a real estate referral partner to find out exactly where you stand financially. What you don't want to do are a couple things. You
Okay.
don't want to max out a credit card, okay?
Okay.
You want to keep your credit cards preferably at like 30% of what the limit is. So let's say if you have a credit card with a limit of $1,000, you want
Mm-hmm.
to keep it at a balance of about $300. I know it's easier said than done, but that's the
Right.
best way to do it.
Uh-huh.
Secondly, you don't want to change jobs. Okay, you want to keep the
Mm.
same job. Now, if you're salaried, you could change jobs, but the easiest way is always to stay at that same job. Okay, and then
Okay.
thirdly, you want to keep your reserves. You want to have enough cash to close in the event that you need to make a down payment or what
Mm-hmm.
have you. Okay, so again, uh, check your credit. Don't change jobs. Don't start a new business.
Oh,
Yeah, don't
which
start a
is
new business.
interesting that you say
Mhm.
that because a lot of people were doing that, especially since the whole COVID. Have you found some people are starting to, hey, I've started a new business, and then there's some hiccups there with
So
them
great
trying to.
question.
Mm-hmm.
More than ever, our population is self-employed more than it ever has been.
Mm-hmm.
People found avenues to make money besides working in a corporate environment because number one, those jobs, those salary jobs aren't really there as they used to be. And number two,
Mm-hmm.
people become more creative to find ways to make money. When you're self-employed, you got to think of this though. You need to have at least 2 years of history of being self-employed to qualify. That's the rule of thumb. two
Okay.
years. So that means you have to file 2 consecutive tax returns in order to
Mm-hmm.
qualify for financing. So that's why I
Okay.
said, if you have a job and, hey, if you think, what, I'm going to do Uber on the side and start that. Well, what could happen is that could actually prevent you from qualifying because of the way that you may write off expenses or what have you, which could decrease your income from that salary job. So
Okay.
while you're looking, you want to keep everything status quo. Once you reach out to that professional who says, okay, this is how you qualify, these are the numbers,
Mm-hmm.
keep everything the same.
Okay. Now, everything that just the feedback you just gave us,
Mm-hmm.
does that apply with all cities and states or regions? Let's say East Coast, West Coast, the South. Is it a pretty much general, or is that kind of different in
Absolutely.
different
That's a
areas?
very good question. Yes. So no matter where you do financing, everyone's going to follow the same rules. Okay.
Mm-hmm.
Because we follow or we sell our loans or they're insured by the same mortgage insurers, which are for conventional financing, Fannie Mae and Freddie Mac, these huge, technically non-governmental organizations.
Mm-hmm.
And then you have FHA, which is a FHA and VA for veterans and first-time home buyers typically. So we all follow the same rules. So you
Okay.
absolutely want to do the same thing. Keep that job. Don't start a new job, but yeah, it'll be the same for everyone. Mm-hmm.
Okay. Now, I know that there's a lot of myths that are thrown all over the place. Like
Mm-hmm.
you have to have 600. I know you were talking about,
Mm-hmm.
getting your credit right.
Mm-hmm.
Is that a myth? Is that one of the myths that's out there that, oh, you have to have 600 and you're good? Or is there some flexibility there?
That is a myth. So ironically, in the last couple months, I'm closing deals for persons who are in the 580 credit score range, and they're
Okay.
using government financing, which doesn't mean it's poor financing. It's actually great financing.
Mm-hmm.
They're doing with a 580 credit score. They've locked into rates within the 5% range that's fixed, which is excellent. So you don't have to have technically which is 620 for conventional financing.
Mm-hmm.
Okay. That's typically the guideline, 620. Government financing for first-time home buyers, for those persons who don't own anything, will allow you
Mm-hmm.
to go a little bit lower, but you absolutely want to have the best credit, okay?
Of course.
Because that'll help you with your process. You won't have to explain late payments on different items, collections and what have you.
Mm-hmm.
So yes, you can go as low as 560, okay? But you can actually have a 580 credit score. Now, the other myth is the down payment.
Okay.
Most people think, hey, you need 20% down. No.
20%.
With conventional financing, if you're a first-time home buyer, someone who
Mm-hmm.
hasn't purchased in the last 3 years, you can come in with as little as 3% down. Okay.
Okay.
You do need to have a little bit higher credit. I think it's a 660 credit score or 680, excuse me, for that program. But
Mm-hmm.
for FHA, you can go as little as 3.5% down with a 580. Okay.
Okay.
So that's the biggest thing that most people think, wait, I need this. No, you just need 3 to 3.5%. And that money can come from a number of places. It can come from your 401k. It could come from stocks, checking,
Mm.
savings, obviously. And the biggest piece is it can be a gift. You can have a family member, as long as the money's sourced,
Okay.
the
Uh-huh.
money can come from mom, dad, cousin, sister, brother, as long as we source
Okay.
the money. So all of
Yeah.
your down payment can come from a family member.
Nice. That's good to
Mm-hmm.
know. That's
Yeah.
that's good information. Um, I know, we've been dealing with this whole COVID stuff and it's just been
Mm-hmm.
all over the place and impacted. How have you seen, prior to, COVID versus now? I know there's probably a lot of negativity,
Yeah.
surrounding that. What did you see, the impact, and was there even any positive that you're able to see now that is different versus before we got into all of that mess?
Great question. So when COVID first hit, everything crashed, right?
Mm-hmm.
Stock market, bond market. What the positive piece for that was interest rates came down. So a
Okay.
lot of people were able to take advantage of that if they were still working to do
Mm-hmm.
refinances and purchase. Now, guidelines did change with regards to additional things that we would have to verify with. If you're someone self-employed, you have to prove that you're still receiving income. If you were someone who was working, we had to do additional verifications to make sure that you weren't on a furlough, what have you.
Oh, okay.
Um, we had to verify that you were still making your payments on time for the last 12 months. But since then, that was 2020, those
Mm-hmm.
guidelines have gone because the economy technically had rebounded.
Yeah.
Okay, so yeah, all those additional guidelines are gone. So which is great.
Wow.
Now, because of inflation, rates have gone up. So it's a little bit different, but
Yeah.
still, that additional, those additional verifications have gone to the wayside, fortunately, which made it a little bit more difficult to do loans.
Okay.
Mm-hmm.
Yeah, I knew there was going to be some ups and downs and pros and cons behind, this whole COVID
Mm-hmm.
situation that we've been dealing with.
Yeah.
Um, I do hear a lot of people in regards to credit, like we just spoke about. Is there some simple, you know, go-tos on if a person is trying to get their credit in line so they can, take advantage of all the resources that are available to them? Are there some, just some simple ways they
Simple
can,
steps. Yeah.
yeah, simple steps on that,
Well, the first thing
making
is
it better,
this.
rather?
Yeah.
Mm-hmm.
The first thing you want to do is pull your credit. Go
Yeah.
to a loan officer, whomever, or go to one of these credit consumer sites that allow you to access your credit for free. Get a free credit report. Okay.
Okay.
Um, Once you get that, and fortunately for us, as a loan officer, we have software that tells you, hey,
Mm-hmm.
if you're to say, hey, Jerry, can you pull my credit? I need to see where it is and give me some tips of what I can do to improve it. Well, we have software that tells us, hey, if I pull your credit and it's a 620, 640, what have you, on all three bureaus, I can, if there's potential for it to improve, it'll tell
Uh-huh.
me the exact steps of what you need to do. Okay. It'll say, pay this off, or
Mm-hmm.
make payments, for 6 months on this, or remove yourself from this account. So again, the most important thing is to
Mm-hmm.
reach out to someone, a loan officer, who can actually do this for you for free instead of
Mm-hmm.
going to some credit repair agency. And you can do those steps sometimes within a week, right? Your
Okay.
scores can be improved that quickly, or it may take 3 to 4, 5, 6 months. But the number one things you want to do is always make payments on time, right? We know
Mm-hmm.
that, right? What does that actually
Yeah.
mean? It means the things that are on your credit are the following: credit cards, those
Mm-hmm.
report to bureaus; auto loans,
Mm-hmm.
personal loans, student loans, your
Mm-hmm.
mortgage. And
Yeah.
now sometimes even landlords, like property management companies, are actually reporting to bureaus now, credit bureaus. So
Oh, okay.
that may appear as well. But what you want to do is you always want to make a payment prior. A late payment is considered to be after 30 days.
Mm-hmm.
So as long as you make that payment, you're a minimum payment prior to that 30-day cycle, you're not late.
Mm-hmm. Right.
So
Okay.
again, late payments are most important, and then you don't want collections. I know we have it. We've all been through this. You go to the
Yeah.
doctor, your insurance is fighting with the hospital, what have you. You always
Yeah.
want to resolve that before it
Mm-hmm.
becomes a collection. Even though
Okay.
now the bureaus have now considered to not have to put those, they're determining that those aren't, what's the word I'm looking for? Something that they want to put on bureaus on your credit
Mm-hmm.
reports any longer, because there's been so many disputes. So, but in the past, there could be some of those things there. But again, pay things on time is
On
the most
time.
important thing. Mm-hmm.
On time. And I like how
Uh,
you said how it could be a week or it could be 3 to 6 months. So it depends on the situation.
yeah, exactly, exactly.
Okay. So this is good information, Jerry. I
Good.
appreciate this. And I'm sure everybody does too, that's listening and that will see this. And,
Yeah,
I just have one more thing before I let you go. Because,
sure.
like I said, this is a chat and we're just keeping it simple and to the point. Is there an overall takeaway that you give your clients, or that you can share, that, you know, for a buyer or seller? What's your overall takeaway, you know, that you want people to keep in mind whenever they're getting ready to dive into looking for property?
I think the most important thing is to use, when you're looking to purchase and or sell, is to
Mm-hmm.
use someone who's reputable, either a mortgage loan officer
Mm.
or a real estate agent. And it's not that hard, okay? Because there
Mm-hmm.
are a lot of agents who are out there looking for business, who've done very good business. So do your research on who that person is going to be who advises you, okay?
Yeah.
You know, go to everyone. Everyone knows someone who's bought a home, sold a home. So you go to those people first for, you know, a reputable referral.
Mm-hmm.
Secondly, when you get into the process, especially if you're financing, you're not paying cash, like a lot of us
Mm-hmm.
aren't. So most of us are financing.
Mm-hmm.
Do what makes you more comfortable, right?
Okay.
If even though you may qualify for a $7,000 mortgage, monthly mortgage, if
Mm-hmm.
you only feel comfortable paying three, do what you feel, right?
Okay.
Because yes, we may meet the guidelines, but you're the one who's going to have to make the payment, and you know your finances better than anyone. So follow what you feel is the most comfortable for you, because it's a long commitment,
Yeah.
and you know you're going to be the one who's responsible for it. And then the most important thing is this. I saw a stat yesterday that rents are at the highest that they've ever been, ever. The average rent for a 2-bedroom apartment across the country is $2,000 a month, right?
I believe it.
Yeah.
Mm-hmm.
So even though mortgage rates have gone up, now that the
Mm-hmm.
market's kind of changing a little bit, if
Mm-hmm.
you are still renting, this is still an opportunity for you, because guess what? We all have to have a place to live, right?
Right.
So why not purchase something,
Mm-hmm.
okay, and pay your own mortgage,
Yep.
for which you're going to be paying interest, obviously, and principal, which is like a savings account.
Mm-hmm.
And depending on your tax bracket, you'll get a deduction from your taxes, right, for the mortgage interest. So if you're someone who's renting, especially paying, you know, a higher amount of rent, it's
Mm-hmm.
always good to investigate, just to find out, hey, if I bought a home for $350, what's my payment going to be? Is it
Mm-hmm.
something that I can do? How does that compare to what I'm paying in rent now? Because $2,000 a month is basically $24,000 to $25,000 a year that you're throwing away. I hate to say it, but you're throwing away, right?
It's true. Yeah, you're exactly right. Okay, well, I appreciate you, like I said, chiming in. And I know the market is forever changing.
That's right.
So you'll be back maybe in the fall. You want to do an
Yeah,
update? And because
absolutely.
I know we'll have, you know, plenty to talk about, because like I said, it's forever changing.
Yeah,
And so yeah, we'll do that. So thank you again
absolutely.
for chatting today, and everyone that's out there. Stay tuned for the next chat that I'm going to have, and then, you know, just keep in touch, because we're going to have Jerry back, and then we'll have some updates on that as well, on the real estate market. So everybody out there, take care and be safe. And Jerry, we'll talk soon.
Thank you, Shaina. All
Thank
right.
you.
All
All
right.
right.
Bye bye.
Bye.